San Antonio now holds the dubious distinction of having the nation's most sluggish real estate market, with properties languishing for 83 days before finding buyers, if they sell at all. This represents a dramatic shift from the pandemic era when homes moved in just 2 to 3 weeks amid fierce competition. The market has essentially ground to a halt. Real estate professionals describe weeks without any property viewings, open houses attended by no one, and sellers abandoning hope of finding purchasers. The median property value has declined to $257,000, representing a 3.9% annual decrease, with forecasts suggesting another 4% drop ahead. Despite falling prices, demand remains virtually non-existent. Properties now receive only one bid on average, compared to 5 or 6 in healthier times. Sellers are accepting offers 4% below their asking prices simply to complete transactions. More than half of all available homes have reduced their prices, yet still struggle to attract interest. The irony is striking. San Antonio's previous stability has become its downfall. Unlike Austin or Dallas, the city never experienced explosive pandemic-era appreciation. Values increased moderately, positioning it as Texas's affordable alternative. However, this meant homeowners built less equity cushion. When conditions shifted, they had minimal buffer, leaving many owing more than their properties are worth. The inventory crisis is severe. The market now carries 5.2 months of supply, nearing the 6-month threshold indicating complete buyer dominance. Available properties have surged 18% annually, with over 17,000 homes unsold. Meanwhile, absorption rates have plummeted 36%, creating a backlog that continues growing. Several structural issues compound the problem. The local economy relies heavily on military installations, healthcare, and tourism, sectors facing significant headwinds. Military families hesitate to purchase given potential transfers. Healthcare organizations face budget pressures. Tourism hasn't rebounded to pre-pandemic levels. Additionally, San Antonio lacks the high-earning technology positions supporting Austin or the energy industry wealth bolstering Houston. Lower median incomes make current pricing and financing costs prohibitive for most buyers. The pain isn't distributed evenly. Premium developments like Stone Oak and Alamo Ranch see properties sitting for over 100 days. Downtown condominiums fare worse, with some listings exceeding 200 days. Even the Pearl District, considered the city's most desirable area, has experienced 10% value erosion with no apparent floor. The rental market offers no reprieve. Desperate sellers are converting unsold properties to rentals, saturating that sector as well. Single-family homes rent for approximately $2,000 monthly while mortgage obligations run $3,000 for equivalent properties. This unprecedented gap between renting and owning costs discourages purchasing, further paralyzing sales activity. Builders completing projects begun 2 years ago find themselves with unwanted inventory. They're offering $30,000 incentives, mortgage rate reductions, and complimentary upgrades, yet even newly constructed homes with premium features can't attract buyers. Some developers have halted mid-project, leaving partially completed neighborhoods that further depress surrounding values. Those who purchased in 2022 or 2023 face particularly dire circumstances. Many are underwater, unable to sell without bringing cash to closing or refinance due to insufficient equity. This immobility constrains economic growth, which further suppresses housing demand in a vicious cycle. 3 traditionally core buyer groups have retreated: retirees concerned about property tax burdens on fixed incomes, young families unable to afford entry despite dual incomes, and military personnel unwilling to risk purchasing in a declining market before potential reassignment. The professional ecosystem is disintegrating. Agents report income declines exceeding 70%. Brokerages are consolidating or departing. Title companies have conducted mass layoffs. The infrastructure necessary to facilitate transactions is crumbling, making future recovery even more challenging. Current data confirms the severity. Properties average 76 days on market, with many sitting considerably longer. Only 28.6% sell above listing prices, down from 70% during the boom. Multiple offer scenarios are virtually extinct. The market exhibits complete paralysis. Sellers lack leverage while buyers feel no urgency. All indicators suggest continued deterioration. Forecasts predict further 4% value declines. Interest rates are expected to remain elevated. Population growth, previously a strength, has decelerated as people avoid relocating to a city experiencing housing market failure. Projections of 80,000 additional households are meaningless if they choose renting over purchasing. The comparison to 2008 is inevitable but concerning. San Antonio weathered the crisis relatively well with modest declines and swift recovery. This situation appears potentially worse. The combination of affordability barriers, excess inventory, and damaged buyer psychology has created unique conditions. The prevailing sentiment that the city's best years have passed creates a psychological obstacle that price reductions alone cannot overcome. For prospective buyers, apparent opportunities carry substantial risks of significant equity loss. For sellers, the recommendation is stark: complete any transaction possible immediately rather than waiting for recovery that may take years or never materialize. San Antonio's transition from stable market to the nation's most dysfunctional is complete. The only remaining question is how much further values will fall before stabilizing.